Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite US Market Update. Taking a look at the chart from the previous week, you'll be able to see that pretty much that narrowing pennant pattern is continuing as we move back and forth between the two trend lines. It's pretty amazing how it's staying within the trend lines even as it narrows. Again, there is a breakout coming. Can't tell you which direction, but there's certainly a breakout in the offering. We did have on Sunday an announcement of a trade deal with Canada that could move things to the upside. On Monday, we'll see how the market reacts when it opens. We have lots of things going on that could push a downside breakout as well with rising interest rates. I'll show you the dollar, inflation rising. There's some negative things that equity markets don't like. But there's a case to be made either side, and that's when you have a breakout pattern. You don't pick a direction one way or the other. Let the market tell you. Taking a look at the SPY so that we can bring volume into the mix. Again, we had those two above average volume days last week, and then we've dropped back below average, although in some days that we're a little bit on the elevated side, but nothing really to stand out. We did have some volume behind, especially this breakout day on the 20th. If we go back to the SPX chart and turn our Elliott wave icon on, you can see that basically we're still exactly where we've been. We're in a wave 3, we know that, and we have the forecast wave 4 should we break out to the downside. If we break out to the upside, obviously the wave 3 is still intact. Let's take a quick look at the DMI and see what the ADX is showing us. And we did have a little curve to the upside on the move to the upper trend line, and then as we've drifted back, the ADX is curled down, showing you that there was no real strength on this downward move. So the ADX is just not really showing much of a preference one way or the other. Again, not unusual when you have a breakout pattern. So we'll let the market tell us whether the wave 3 continues or do we begin the wave 4. Looking at the VIX, we still have this massive descending triangle. Nothing has changed here, exactly as we were last week. 12 holds. Every time the market comes down to the level of 12, it's held. As we know, if we break below 12, we move into the trading range between 8 and 12, with 12 then being resistance rather than support, and 8 being support, at least based on the last several years. But we could break either direction here. Nothing definitive one way or the other. Looking at the dollar, I wanted to show you that because a rising dollar is not good for an economy. Somehow that's come out that it's a difficult thing. The reason for the U.S. specifically is the fact that we have so much debt. We're so far in debt that if the dollar gets stronger and interest rates go to the upside and they're still hanging in that range, the debt becomes more expensive to service. So your payments become higher, and that's where the challenge becomes. Is we keep borrowing money month after month after month through our auctions, auctioning off Treasury notes and bills. That's how the U.S. government gets money in order to operate. And if rates go up, it costs more to do that, and that eventually starts to sting the economy. So as you can see with the 10-year, we went right up to that previous wave 5 high. That held, at least for now, a little bit of a pullback with a wave C high as well. So we'll see in this trading range if we're able to break above that level or if we're going to head back down towards the lower trend line. That actually would be good for the equities markets if we want to have a sustained move higher further from here. A break to the upside with higher rates would put more pressure on an upward move in the markets. Back to the dollar, note that we talked about last week how we were coming down into this area of support at the previous wave 4, and that's where we bounced. So we came down, we satisfied the wave 5 moving to the previous 4, and now it looks like we're trying to make an impulse move to the upside. Not enough to be labeled yet with the Elliott wave, but certainly with those last 2 days on Thursday and Friday, looking like that's what the market wants to do. Getting to our case studies, CLR is broken to the upside, which is fascinating considering it gave us a false breakout to the upside in the first place. But again, this is such an example of why you don't take one leg of your strangle off. You let the market tell you what it wants to do, because we had two false moves. We had a false breakout to the upside, followed by a false breakout to the downside. Now, it's been my experience over 20 plus years that when you see that, the next move is the good one. In other words, you don't have a third false move. So if history is any guide, which it certainly is in the world of technical trading, we would expect that breakout to the upside to continue and to be the one that moves out of this Elliott wave symmetrical triangle. So we'll see how that plays out. Looking at one of our newer case studies, MMS, still we had the wave 4 pullback. We're waiting on the move up to the wave 5, so really nothing to report, just a sideways move over this past week. But on FFIV, we went right up to our target. We said that last week we wanted to put our butterfly with the midpoint at 200. That's the move we were expecting. Look at the high on Friday, 199.71. I'd say that's close enough to 200, so we took that off on Friday as it hit our target. Don't get greedy. When things reach your targets, that's the time to take your positions off. So that one's done. We're finished with FFIV, and we still have MasterCard. Taking a look at that. It's still in the wave 3. Didn't really do a whole lot this week. Some up days and some down days. We're about $1 higher than we were last week, but still motoring along just fine in this wave 3 to the upside. So not a whole lot different to discuss there. And this week, for a new one that I wanted to show you, is ATVI. And I actually sought out my son on this because this is one of those gaming companies, and some of you may know that Fortnite is like the hottest game on the planet right now, and Activision Blizzard, which is a merger of two previous gaming companies, is coming out with their new version of Black Ops, which is expected to be possibly as go as viral or be as widely played as Fortnite has been. For those of you that may be listening to this and don't know what Fortnite is, go ask your kids. They'll tell you. So anyway, we're in a wave 3 to the upside here, and that looks to want to continue based on the confirming indicators that we utilize along with our Elliott wave, using the amazing ability of Integrated Investor to program your own custom searches. And you can see that we have a rising ADX. We're between the two directional indicators. It's showing basically that there's strength to that move. That's what we want. We just want confirmation of the Elliott wave move. Elliott wave is great. Is it 100% accurate? No. But if you can find some confirming indicators, then you can increase your percentage of accuracy, and that's all we do. Elliott wave is the key. That's the thing that we focus on, and it's making a comeback. It's pretty amazing because I think people have finally realized, hey, they got to learn how to use this thing correctly, and if they do, wow, it's amazing. Look at our record over the last several months. Go back and watch the previous videos. It's just amazing, even to someone like myself that's been trading for over 20 years. Anyway, so we look for that one to move to the upside. We're sitting at about 83. You could put a butterfly up in the 85 to 90 range, somewhere in there, if you were interested in following along with a paper trade or whatever you want to do with this one. We'll see how it continues to play out, but that's a new one I wanted to talk about this week. So that wraps things up for this week. Hope you've had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.